some of the PSFs is just nowhere near the newer launches in the OCR, in the RCR, right? You can still find freehold developments in terms of their PSF close to 2,000, District 10, District 11, some more within 1 km of good schools, right? So all this, I don't think they will go too far wrong. And here are some of the opportunities that you might want to consider in 2024. I start off first with some of the gaps that I observe in the market right now, which is, I believe, in the upcoming years, the new launch market, especially for the 2+ study, 3 compact and 4 bidders, will be extremely profitable. The reason being that especially you need to see the gaps between some of these developments. Some of the newer 2+ studies, depending on the layout, I believe they will sell as 3 compacts in the future. And if you spot some areas whereby there are not that many 3 compacts to serve the entry level 3 bidders in a vicinity, those are also very good gaps to fill in the market. 4 bidders, right? Then you just have to analyze existing supply of 4 bidders in the area. What kind of sizing are they? Are there a lot of supply there? Most likely, the answer is no for those, right? And if you know you can get a new launch 4 bidder, in terms of quantum, at the same price, I think that's quite good already. If it's even lower, it's all the better. So these are some of the gaps that I will observe in the market, and pick some of these units up for yourself. 99 years leasehold landed. So I thought really hard about, whether or not to put this inside. Because I must confess that, right, I was not a fan of 99-year leasehold landed for the longest time. I believe you check out my previous videos, I've always said, if you want landed, buy the freehold one. But, right, in recent times, I have noticed that not just, some of even the older 99 leasehold developments, case in point, your Mandarin Gardens, your Neptune Court, Laguna Park, those 30-40 years, Pine Grove 30-40 years, their prices are still edging upwards. And I'm surprised to see some of those prices in your Laguna Park 3 bidders even crossing the 2 mil price point. And then I see some of these leasehold landed properties that are not even nearly as old, right? That are offering, I've seen some in the District 16 area, 3,000, 4,000 plus square feet built up. It's not even strata, you can tear down, fully rebuild, right? 2.8 million, 2.7, 2.6. I do see, right, that this 99 years leasehold landed will start to move up to fill the gap. So new launch always will take the lead, right? Followed by, the rest of the 99, generic 99 years and generic freehold developments. Then the older 99 year leasehold developments. Then your freehold landed. And of course, the circle of the market has come for the demand to flow back, because the 99 year leasehold landed units really has been lagged to a lot of all these moves, right? So something to really consider. And if you're concerned about, I buy now, then next time still can sell or not. I guess in recent times, there's also a lot more data to show that if the price is right, despite the lease decay, right, there's still going to be demand for it. Just remember this point, that demand in the market is not homogeneous, right? Demand is a lot more price sensitive, so to speak, right? And at the right price, there will still be buyers for your unit, right? Next up, the new versus old supply. I wouldn't dive into this too much, right? I talked about this a lot in 2023, and I believe will still apply in 2024. But just a very quick summary of which is that, if you go into a certain area whereby the new supply or your newer supply, right, it's a lot more expensive. Most of the time it's freehold, slightly larger developments. Case in point, District 15, CCR, D10, D11. The older layouts, bigger in size, 3 bidders, 1,300, 1,400 square feet freehold, so quantums are large. Alternatives will be, old 99 year developments that are still performing well. Make sure you check those out. They're still performing well, right? It goes to show the sheer demand in the area, and if you can pick up something that serves the in-between, 900 square feet, 1,000 square feet, 3 bidders, 99 years, be it new, be it sub-sale, so to speak, then there's a good move upwards, because I've studied all these 99 years old developments, quite a fair bit in 2023, and I'm surprised to see a lot of them still doing well. And you know, if they do well, you can tell yourself that, hey, this area, the demand is good, and so you know, you can pick up something that in between there. It's quite tricky. Some of the prices have came up quite a fair bit already, and if they come too close to this or too close to 99-year leasehold landed, they may be a little overpriced, so be careful about that, right? So those are some of the gaps over there. Secondly, it's low land price launches, okay, which early on in the video I've picked up some of those. Right now, land prices have sort of taken a dip, and I believe they are picking back up, so the GRS next year should pick it up together with consensus interest rates and whatnot. So some of those launches, if you can catch those low PSF ones, will be a really good opportunity for you. Now, as with next year 40 over launches, right, there's definitely going to be a lot of hype over those launches, but don't forget to pay attention to some of the post-launch units, some of the balance unit. Remove that connotation that, you know, hey, so good, why not sold, okay? Strip that aside, remove the emotions aside, just be objective about it, especially if sentiments start to move for next year, right, 2024, and there's a lot of FOMO into the newer launches, and especially because some of the launches that's happening next year, very, very good. You have your, you know, Toa Payoh, like I mentioned, you have your Tampines, you have also your Clementi, you have Pine Grove, all those quite good ones that will attract a lot of attention. But you know, there are still some good value buys in the post-launch markets, especially the slide that I shared earlier on those that didn't catch the 50%, never crossed the 50%. Not all of them can buy, right? Pay attention, but don't forget about them, okay? Sub-sale, I believe there's still opportunities out there. Just be very careful with the kind of quantums that you're buying into. If you're going too close to the newer development launches, then you got to be careful, right? Especially if you're buying slightly larger units, you may be squeezed in terms of the supply. But if you're buying something a little smaller, and if you notice there's a lot of supply into that area, right, it can be a decent opportunity for you to grab something that is not sort of overpriced, above valuation and whatnot, where the supply and demand dynamics is a little fairer. Okay, especially if you're a buyer lah. Right. Next up, fundamentally strong CCR properties. Okay, so while the CCR, if you look at the price index, tends to be tapering down, if you go to the right areas, the prices are actually coming up lah. If you really go study, right, some of the PSFs is just nowhere near the newer launches in the OCR, in the RCR, right? You can still find freehold developments in terms of their PSF close to 2,000, District 10, District 11, some more within 1 km of good schools, right? So all this, I don't think they will go too far wrong, and especially PSF is so far away from the new launches, RCR, OCR, right? The quantums can't be that far off anymore, right? Maybe 1 to 2 years back, the quantums were still quite far off, right? But once the RCR new launches 2,500 PSF, that quantums will then be very, very close. So, you know, don't remove CCR altogether because the data doesn't suggest it, especially if you are looking for investment and you want to be contrarian to the mix, right? You can pick up some of these 3 and 4 bedders CCR, fundamentally strong CCR properties. What do I mean by fundamentally strong? A decent size development anchored down by good schools, quite simply so, right? Amenities or whatnot, not so important, right? That's what I mean by fundamentally strong in the CCR, strong resale transactions, that kind of thing. If you're an investor, you can pick up some of the 3, 4 bedders around there as well for the right price, okay? The only issue is sometimes quite tough to get right prices in those developments, but if you know, buy for own stay, you just have to pay lah. I like to call it a term of musical chairs, especially for those in the, you know, your District 10 area within the good schools lah. It will just be one family that needs it for the address passed down to another family that needs it for address. And for those, if you can get anything remotely near valuations, you should just grab it already. Don't expect anything below valuation. Most likely you need to pay COV, and if it's not crazily high above COV, something that you can still consider. Okay, right, resale around the areas with a lot of GLS happening is also something that you can consider. The Lentor area, I think it's already in the past already, right? Some of the GLS areas that I talked about in just before, right, my top 3 GLS picks, you know, you can pick up some of the resale units in that area because the new GLS is going to bring a lot of attention to the area. You're front running it a little bit. Once the development launch, I believe everything else is sort of priced in already, right? But you know, if the GLS is launched and you pick it up during that time, I think it's still early enough into that game lah. And lastly, again, ECs, right? as with 2022, 2023, still I believe is a decent value proposition. Still a lot of supply, especially in the MOP market, yet to be absorbed, right? So something that you can consider. Or even the newer ECs, right? You definitely end up better on the other side, especially because of the fact that you're forced to hold it for 8 years. You may feel that, wow, the PSF now for brand new EC also so high, but you know, the sheer amount of holding period will make sure that you come out better on the other side.